As you have already seen, exchange rates on the transaction date and corresponding equivalent values are memorized by system. So if you do not indicate exchange rate on the transaction date, there might be mismatch between exchange rate selected by system and actual exchange rate on the transaction date. Let's look at this case. At US dollar exchange rate on January 1st, let's say exchange rate between US dollar and lari was 2 at that moment. Now let's record transaction on February 1st. Select account 1220, debit 100 US dollar. Balance this entry, and let's look at exchange rate which has been selected by system. Here you see exchange rate which was added on January 1st because exchange rate on February 1st was not entered in the system. So let's save this transaction and go back to the menu, rates, and add US dollar new exchange rate on February 1st. Let's say 2.5. However, if you look at transaction which has been done recently, you will see that US dollar exchange rate will be the same as it was on January 1st, as well as equivalent values because exchange rate was memorized by system. In order to correct exchange rate here in this transaction, you should select currency once again, and system will correct exchange rate and equivalent values as well, which is quite difficult because there can be lots of currency transactions in the system and you should correct them one by one, or cancel this transaction. Or you can access the menu macro transaction, macros for preparing the balance, recalculation of values in entries, and select macro, correct exchange rate, and recalculate equivalent in entries. You can select period during which you want correction will be done, select currency, and start this transaction. And now if you look at exchange rates and equivalents here in this transaction, you will see that both of them will be corrected, and it's an easy way because using this macro you can correct lots of transactions at once.